Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to be going over some big news from Tesla. Massive news you need to hear. We're also going to look at the earnings calendar for this week. It's going to be a big week for earnings. We do have some important economic data as well that we will look at. Tom Lee says that out of the last 5 occurrences that we had this kind of technical setup on markets, we've actually been higher 2 weeks later. As I've said on this channel before many times, literally the past 2 or 3 weeks, I've said this over and over again. I thought a consolidation type correction was coming, not like a 10% correction like you think when you hear a correction, but like a 2 to 3% downside kind of consolidation. Okay, that is where we are right now. I actually think the downside is over with. I know it sounds crazy. A lot of people are bearish. That's not going to be a popular opinion. And that's why this week is going to be very important. Now, I'll give you a rundown of the setup here as well for the broader markets and for Tesla stock this week from a technical perspective as well as from a sentiment perspective. So we have a lot to get into here in this video, ladies and gentlemen. This is a jam-packed one for your Sunday afternoon. Hit that like button as well as subscribe to the channel if you have not done so already. Now, if you guys want to take it a step further, come trade with us live in real time. Every time I make a trade, I send out alerts, but really we're taking medium-term investing horizons in that group. What we're doing is going out and finding small cap AI stocks that are undiscovered by Wall Street. I do this personally and have done this personally since about 2017. Whatever the market's like at a particular time, whether it's cannabis or biopharmas or small caps or, whatever the trend is or the theme, I go out and I find the stocks that are in that theme or a direct correlation to that theme that are undiscovered, that Wall Street has not picked up on yet. Okay, we go invest in those. And inevitably, Wall Street figures it out. I have many examples of this. Applied Digital, Nebius, Novartis Semiconductor, even HIMS was a big one when like GLP-1s started to become popular, when Ozempic was really popular. I mean, that was like an adjacent trade to that. Many other examples, IONQ, supercomputing, right? Tons of examples of this. Come check it out, link down below in the description of this video. We are making some huge trades over there right now in literally undiscovered, by definition, pure play AI stocks growing at thousands of percents. It's crazy the opportunities that we are uncovering still in this market. Link down below in the description of this video. With that said, let's get into today's episode. I'm not going to beat around the bush here. I'm going to give you the Tesla stock news right from the start. Tesla today expanded their geofenced area in Austin, Texas, increasing its coverage area to more than 4 times what it was just 6 weeks ago. So you can see what it looks like today. They really expanded on the bottom portion of this. Okay, I'm not from the Austin area, but it does look like this was a significant expansion nonetheless. Like, this was this Highway 35 marker, right here, almost in the middle of the bottom. It wasn't even like in this prior image. So it does look like we are expanding a lot faster than, again, Waymo could even dream of. This is the geofenced area for Waymo versus Tesla. So again, pretty comparable already. And Waymo's been operating in Austin far longer than Tesla. And it's going to become more apparent that Tesla is going to be the big winner when all things are said and done. Tesla also says they will open their first ever supercharging station in India on August 4th in Mumbai. Donald Trump also said over this weekend the US economy will boom in 5 to 6 months. MKBHD says Tesla robotaxis were quote-unquote eye-opening. Now, here in the news today as well, Canada's trade minister tells CBS News he is encouraged by the conversations with Lutnick and Trade Representative Greer. Canada's trade minister says a deal to bring down some tariffs is an option. And really, as I've said before on this channel, the only countries that matter are Mexico, Canada, Europe, and China in terms of like broader markets that could actually be a catalyst to like cause significant economic pain. Other countries, they only matter for certain industries, and certain industries, like we've seen, can go through down phases and it doesn't hurt the earnings cycle. Like we've had a rolling recession for years, as someone would call it. Okay. It's really the large shocks that affect many different industries, like the 100% plus tariffs on China, the trade embargo with China, that could have been really detrimental to the U.S. economy. And at this point, we basically have an outline of a deal with Europe coming well on its way. Same with China, same with Mexico. Canada is like the last holdout here, and they're at 35%. If there's some kind of deal with Canada, the trade war situation is basically over with. And I think the markets are kind of looking at this as if it's almost over. There's obviously some downside risk priced into markets still because the deals are not finalized and anything can happen. So I still think there's upside upon positive news announcements. But at this point, unless something were to go really bad, I don't see this as a negative for markets anymore. I think it could actually be a positive, just getting some clarity, getting the uncertainty over with. Human nature hates uncertainty. Just no matter what it is, you hate uncertainty. Okay, you always want clarity. Your brain is wired for that. The same is true in markets. We can handle bad news very well. We cannot handle uncertainty very well. Long story short, the trade war is basically over with. Headlines can move markets, but I think it's much more skewed in a positive direction at this point, unless trade negotiations were to somehow just fall apart. Canada's Trade Minister LeBlanc remains optimistic about trade talks with the U.S. Hassett on the next Fed chair says Trump is in an active search with Besson. Hassett says he does not aspire to run the BLS. Hassett says the economy is smooth sailing despite the jobs report. And this was the funniest thing ever. And I think we need to talk about this just so we're all on the same page. No matter if you like Trump or don't, or love Trump or don't, he wants the stock market to do very well. He loves waking up every day and seeing stocks are at a new all-time high. I think that's like a confidence boost to Trump to some degree. Okay. We had massive revisions to the job numbers for May and June. We lost 258,000 jobs, barely positive for those months. And the jobs report for June or for July came in much lower than expected. What did Trump do? He said, don't worry, markets. The numbers most likely are not real anyways. I'm going to fire the head of the BLS. Do you not see how this is correlated to Trump wants the stock market to do well? Stocks actually rallied upon Trump saying the numbers essentially were not real, not accurate, and firing the head of the BLS. Markets rallied on that. Like, Trump did that because the markets were selling off. Do you want to fight a president for the next 4 to 8 years or longer? We'll see. That wants stocks to do well? Probably not. Just kind of as an overarching bull thesis. Add that to your bull thesis. I don't want to fight that. Greer said that trade truce deadline for China is still under discussion. So that could be coming out literally at any moment. Greer on U.S.-China talks about halfway there on rare earth flows. We do have some economic data for this week as well, but we're going to fly through this pretty fast. I'm actually excited to get into the earnings lineup for this week and really the next couple of weeks, because you're going to get a lot of smaller cap companies. You're going to get a lot of those stocks that we are investing in the trading community, as well as what you might be investing in your portfolio. And the fact of the matter is, when it comes down to earnings season in general, it's been a lot better than expected across the board. Like, even Apple had great earnings. I don't know if the bar is just way too low, but companies are smashing earnings. And it's probably a combination of companies doing very well and the bar being too low. But nonetheless, stocks trade around earnings, like, in general. Okay, sure, following earnings, can there be a little bit of volatility even with good earnings? Sure, as kind of the catalyst is over with, you probably priced in some of those good earnings ahead of time, hence why stocks are at all-time highs, blah, blah, blah. But estimates are going higher, and that is going to lead stocks to go higher as well. We do, though, want to watch the economic data. And it's kind of interesting where we are right now, because we're back in a, if you will, 2022 style market where good news, good economic data is seen as less Fed cuts. We want to watch how the markets take good economic data. I think good economic data is going to be taken well, but it's possible that good economic data could be taken maybe as a non-event, maybe not as great, because it's going to move or, help move the Fed funds futures market. Now, on Friday, we had really bad data. So, like, really bad data, I think, is going to be bad. Really good data for the economy is probably going to be good. But, like, if there's not a clear direction and it just moves the, expected pricing for Fed cuts, it's kind of a toss-up how that could go. The markets are pricing in a cut in September, a cut in October, and currently there's a 43.2% chance of a cut in December, a 41.9% chance of no cut in December. So technically the odds are in favor of a cut over the next 3 cuts over the next 3 Fed meetings this year. So a cut September, cut October, cut December. Depending on how the economic data comes out, these are going to fluctuate based on pretty much every data set that comes out that is in like a large data set, okay? On Monday, we have factory orders month over month at 10 o'clock in the morning. You have some bond auctions, but that's pretty much it. So tomorrow is going to be one of the slower days for markets, as typically a Monday is. And again, we're still waiting for that news of the extension of negotiations with China. So that could come out at any moment, and I would likely see that as a positive catalyst for stocks. On Tuesday, you have the balance of trade for June. This is going to move the GDP estimates, which can move the expectations for Fed cuts. That comes out at 8:30 in the morning on Tuesday. You have exports and imports for June. You also get ISM services PMIs. This is going to be one of the biggest data sets for this week. It comes out at 10 o'clock in the morning. You're expecting the headline number to go from 50.8 last month to 51.5. So you're expecting the number to get a little bit better. Business activity is expected to rise to 54.3 from 54.2. Employment is expected to rise from 47.2 to 48. New orders are expected to rise from 51.3 to 51.4. And prices are expected to rise from 67.5 to 67.7. Now, this is not really hard data. It's soft data, okay? It's the Purchasing Managers Index, okay? That's what PMI stands for, Purchasing Managers Index. So you basically have high-level executives at service companies that give you their estimates for, business activity, employment, new orders, and prices, okay? Prices are the one that Wall Street typically reacts the most to. If prices come in higher than expected, that's negative. If they come in lower than expected, that's positive. You have the RCM TIPP Economic Optimism Index that is also expected to come in a little bit better than last month. And that's it for Tuesday. On Wednesday, you're going to have some Fed speakers like Fed Cook, Some oil data coming out as well, but that is pretty much it. You have balance of trade, exports year over year, and imports year over year coming out from China as well, but that's not going to move our markets. On Thursday, Fed Bostic will give a speech. We have initial jobless claims, expecting those to come in at about 220,000, which would be a just fine number. Say that comes in at 300,000 or something super high, stocks are going to react to it. Keep that in mind. 30-year bond auction as well on Thursday. Consumer credit change, expecting that to rise 7.2 billion. Again, that's one of those data sets that tells you, are people still spending money? So it will be important as well on Thursday. Fed balance sheet, couple of other smaller data sets on Thursday, but that's pretty much it. On Friday, you have the unemployment rate out of Canada, but that is it. So not a huge week as far as economic data. Some data sets that could cause a reaction in markets, but again, what I'm most excited for this week is definitely earnings, okay? So Monday, tomorrow, pre-market, you have Berkshire Hathaway, Wayfair, BioNTech, onsemi, Tyson, and some others. Monday in after hours, Palantir, Hims and Hers, Mercado Libre, Axon, Navitas. That's one of the stocks that I was very early to. Vertex, Bellring, Lattice, and some others. Tuesday pre-market, Pfizer, Caterpillar, BP, Duke Energy, Lemonade, DuPont, Vertical, and Marriott. Tuesday and after hours, AMD, Supermicro, Arista, Astrolabs, Open Door, Snapchat, Lucid, Upstart, Rivian, and Clover. Wednesday in pre-market, Uber, Shopify, Oscar, Novo Nordisk, Walt Disney, Six Flags, Juron, Dave, McDonald's. Wednesday in after hours, AppLovin, IONQ, Symbotic, Duolingo, Fortinet, Energy Transfer, Elf, DraftKings, Jack in the Box, and Joby. Thursday pre-market, D-Wave, Celsius, Eli Lilly, ConocoPhillips, HUD 8, Vistra Energy, Sony, and some others. Thursday and after hours, The Trade Desk, Rocket Lab, SoundHound, NewScale, Block, Pinterest, Atlassian, Take-Two Interactive, and Twilio. And then Friday pre-market, Fubo, Tempest, Wendy's, Canopy, and some others here. So a lot of well-known names are going to be reporting this week, and this is going to be the second biggest week of earnings season from a market cap perspective. It's going to be very important, specifically like AMD, Supermicro. That's going to give us a little bit better of a heads up of what Nvidia earnings could look like, coming out in the next 2 to 3 weeks, right? Different sectors are going to be very important. Palantir, AppLovin, even Supermicro to that extent, like the AI trade could be important this week. Uber, the Trade Desk, different sectors are going to move based on these earnings, because we're going to have earnings for the next couple of weeks, and we've, for the most part, only had big tech earnings. There's been some other companies that have reported as well, but like a lot of AI stocks have not reported yet, right? A lot of even energy companies have not reported yet. So that's what's going to be interesting about this week. And I do think earnings are the big catalyst for this week. Again, unless we get headlines, trade deals, something like that, it's all about the earnings. Now, Tom Lee and Fundstrat say the S&P and equities are overbought, so a bit of consolidation is expected. But we believe the risk reward for stocks remains favorable, and we think stocks will likely be higher 2 weeks from now. And they're pointing to these bearish engulfing candles where, it actually recently has not been a super negative, right? The narrative has not shifted. It says here, S&P 500, many bearish engulfing days equal a non-issue. It's actually, as I've talked about before, a healthy thing to see a little bit of consolidation. We have to just look at the bigger picture here. We fell 20%, rallied back. A lot of Wall Street did not participate in the recovery, and it's been virtually straight upwards. Logically speaking, if we get a little bit of, 2-3%, 4% downside, like maybe that actually, is a positive thing to get Wall Street back in this market, right? They might feel like they're getting a little bit better of a deal because stocks fell 2.5%. The fact of the matter is, if you were like us buying on the 20% crash, you've done very well. And I think the fact of the matter is, the trade war is ending. I think the economy, while it does look like the data is weird right now, it's going through a little bit of a soft patch, is going to be just fine over the next couple of months. Again, earnings are what really drives stocks, and they're just fine. We're going to be getting a bunch of rate cuts over the next 18 months. AI is alive and well. There's a lot of provisions in the big, beautiful bill that are very positive to growth, like the massive deficit. Okay, I know that's a problem for fiscal sustainability. I get it, but it's very stimulative while it's happening. Okay, deficits are very stimulative. Okay, no tax on tips, no tax on overtime, 100% capital depreciation the first year of service for CapEx, capital investment. That is up from 40% in previous years. So you more than doubled that. Okay, it's directly telling businesses to go out and invest. That's essentially what it's doing. Investment drives growth. And I think a lot of people forget that. Investment drives growth. Okay. And then you have other things like being able to write off interest on car loans, things like that. I believe Trump when he says the economy will boom 5-6 months from now. The question really is that I have at this point, how weak does the economic data get? Because if it was just a revision to the jobs numbers, like I think we're going to be over that coming on Monday. Like I think you priced that in on Friday. If things get worse from here and Wall Street needs to start pricing in recession risk, that's where you open up Pandora's box to the downside, right? Corrections, 10% corrections happen because of growth scares. 20% crashes happen because of recessions or like serious growth scares, like odds of recession over 50%. Like, I don't think we're headed in that direction, but it's a possibility you have to be open to. You can't be so bullish that you're, not open to that idea. And that's where we want to watch closely here and try to read between the lines of what's going on with the economic data. I think the economy and the reality of it is much the same as it has been in the last couple of years. I don't think there has been a major change because of tariffs. I don't think there's been a major change because Trump is now the president. I don't think there's been a major change, with anything. The economy largely seems the same. Now, hiring has definitely slowed down, but firing has not picked up in any kind of substantial way. Again, relative to the last couple of years, it's kind of just been the same. And I think hiring will pick up as businesses invest once a lot of them get clarity on the big, beautiful bill and some of the positive aspects of that. A lot of even business owners probably do not know that the whole tax regime for your business essentially just changed. Okay? It's going to take some time for these things to become, well-known public information. But I'm not too worried. Hey, anything can happen. Now, for this week and for Tesla stock, it's going to be pretty interesting again with earnings, with economic data. I do expect we're going to get news on the whole China trade negotiations and definitely on Canada, and that's going to move our markets for sure. Now, for Tesla stock specifically, again, as I talked about in previous videos, Tesla was barely red on Friday for a good chunk of the day. Okay, it was down like 0.3% at one point. I thought for sure the stock was going to go green. It looked very strong. Now, relative to, other big tech stocks, the S&P, Russell, like it did not look great at all. Okay, those areas looked really bad. Tesla, not so much. Okay, it actually looked really good. Now, Tesla bounced off of the 100-day moving average on Friday, around $296 per share. It went back up, came back down. You actually closed below your uptrending trend line. So you want to get back above that coming on, Monday, tomorrow. I think we will. If we don't, then you're kind of between this range of like 305 and 296. A break below the 100-day moving average would be troubling, because that means you're probably falling back to the 270s. But if we can get above that uptrending trend line here, as you can see, then you're back in the range of, 306 to really like 325. And ultimately, you want to get above that 200-day moving average and 50-day moving average as well over the next couple of weeks. That would be a positive development. Although, I do think we're going to have a very strong end of this year. I think it's going to surprise a lot of people just how strong the market's going to be in the last couple of months of this year. Specifically, November, December, I think are going to be very strong. As Wall Street, again, realizes no inflation problem, bunch of Fed rate cuts, capital investments are picking up, so there's upside to earnings. No recession, like trade war is over with. There's a lot of positive things that are brewing under the surface of this market and economy that I don't think are being fully reflective in the markets today. I think people are still worried about, what if trade negotiations go south? What if there's an inflation problem? What if Jerome Powell is fired? Like, there's a lot of, there's a big wall of worry right now. But I think it does start to collapse into the end of this year. And I think it could actually get pretty euphoric, believe that or not, into the end of this year and into the first half of 2026. So let me know your thoughts on all of this down below in the comments section. Ladies and gentlemen, we have a lot to get into in the next video as well, coming out on the channel at 8 p.m. We actually have Grok that predicted Tesla's stock price over the next couple of years, and how many robotaxis are going to be out on the road as well. It's a pretty wild prediction. So stay tuned to the channel for that one. Hit the like button, subscribe to the channel, check out that link down below in the description of this video as well if you would like to come join the trading community. Nonetheless, have a great rest of your day, and I will see you in the next one.